Good morning, everyone. We appreciate your comment this morning, and I stand on existing protocol so that we won't waste time. Over the years, the Nigerian banking industry has been the most misunderstood sector of the economy by its critical stakeholders. This misunderstanding has resulted in what I call avoidable confidence crisis that should aid economic synergy between the banks and the organized private sector. Despite a series of efforts made by industry leadership to address and resolve the prolonged mistrust with its economic partners, however, there exists the widening of the communication gap between these two critical sectors, thus signaling the need for a rethink of strategy towards achieving an enduring synergy. It is against this backdrop that the Association of Corporate Affairs Managers of Banks, the umbrella industry corporate communication and reputation management body, in partnership with CIBN and support from deposit money banks in Nigeria, that we resolved to host this first national stakeholder conference on synergy between the Nigerian banking industry and the OPS. This engagement is taking place today within this precinct with a view to mapping out effective areas of collaboration for the growth of the nation's economy at this challenging time. The conference offers a unique platform for private sector players and the banking community to share perspectives on how the synergy, communication, cooperation and mutual understanding between these two critical segments of the Nigerian economy can be improved. And we are happy to announce the positive reception we received from both the banking sector and the OPS when the idea of this conference was shared. The theme for this national conference, as earlier mentioned by the event coordinator, is promoting synergy between the banking industry and the organized private sector. Why do we need a synergy between both sectors? To the extent that financial intermediaries are crucial to economic growth, there is bound to be a meeting point between the OPS, who are the real sector players, and the banking sector that we call the fund drivers. From available communication research efforts, there seems to be a mutual misunderstanding between these two critical sectors, and all efforts to streamline this perceived gap has not been totally successful. The banking sector and the OPS are meant to be the main drivers of the nation's economy. One galvanizes the credit from the surplus side and redistributes it to the deficit side, while the other operates principally from the productive side, creating wealth and values. Thus, the two critical sectors are like two sides of a coin. They are conjoined and must function together in an economic sense. That is where we have the nexus. There's a link between the two at all times if any economy is to develop and grow. What is the outlook of this conference? It's essentially to develop a workable roadmap for the two sectors to synergize for the benefit of the national economy. Conclusion. Finance, the essence of banking, is the driving force for the private sector. Capital is probably the primary factor of production, as we were taught in elementary economics. On the other side, the private sector, as the end users of banking services and the largest sector of the economy, is also conversely the driver of a sustainable and viral banking sector. So I would say there is a symbiotic relationship between the two sectors. Banking is important to the private sector, just as the private sector is important to the banks. That explains why this conference is taking place. So it is safe to conclude that the more active and synergistic the relationship between banking and private sector, the more we are collectively able to develop and grow the national economy for sustainable Nigeria. Thank you for listening, and I wish all of us a successful deliberation. Good morning, everyone.
A very good morning to you, ladies and gentlemen. The representative of the Deputy Governor, I think is representing the Deputy Governor, because I also know he's going to be at the panel discussion. who is also a Deputy Director in Banking Supervision Department of CBN. The President of Association of Corporate Affairs Managers of Banks, Mr. Rashid Bolarewa, who also is hosting the event today. Registrar Chief Executive of the Chartered Institute of Bankers of Nigeria, Dr. Sheye Awoje, FCIB. Please permit me to rest on established protocol. I'm greatly honored to present this goodwill message at this auspicious occasion, the first national conference on synergy between the banking industry and the organized private sector. We are indeed profoundly delighted and excited as well to partner with ACAMB in organizing this event, which is set to address critical areas of concern and generate more strategy for creating sustainable synergy between the financial services sector and the organized private sector. Ladies and gentlemen, I'd like to congratulate the leadership of ACAMB, ably led by Mr. Rashid Bolarewa, for cultivating this idea to hold the forum at this auspicious time in the history of economic advancement. I anxiously look forward to the outcome and recommendations that will emanate from this event. As you already know, the banking sector is the engine of any nation's economic advancement, and no doubt is a major segment of the Nigerian economy. An efficient financial system is one of the foundations for building a sustainable economic growth and a vibrant economic system. The sector plays a pivotal role in facilitating the economic activity of individuals, private sector, and public corporate bodies, with the end goal of promoting economic growth and ensuring financial stability. In the same vein, organized private sector, which is the umbrella of organization of businesses, membership organization representing the interests of private sector organization in Nigeria, coordinated by institutions such as the Lagos Chamber of Commerce, Manufacturers Association of Nigeria, the Nigerian Association of Chamber of Commerce, Industry, Mines and Agriculture, NATIMA, Nigerian Employers Consultative Association, Nigeria Association of Small Scale Industry, NAS, and then Nigerian Association of Small and Medium Enterprises. They are the drivers of real sector growth and economic advancement through industrialization, job creation, provision of goods and services, and poverty alleviation. Thus, a well-functioning financial system and a vigorous private sector are important drivers of national growth. Growth in GDP, employment generation, economic stability, and poverty reduction. However, I must admit that there are still a lot of untapped opportunities between these two critical sectors, some of which are attributable to lack of proper handshake between the bodies. But given the interdependence of both sectors, it has become imperative for both to work mutually for the growth of the nation's economy. Majorly, the relationship that exists between the banking industry and the organized private sector is characterized by bank-lending relationships, spurred by the objective to grow the economy by making credit available to the real sector of the economy. The CBN has noted that the credit facility extended to the private sector stood at 37.1 trillion as of April 2022, The CBN has also stepped up support via several schemes, such as the Real Sector Support Fund, Commercial Agri Credit Scheme, Anchor Borrower, RT 100 for 100, etc., etc. This is a demonstration of increased support of the banking sector, the productive sector of the Nigerian economy to accelerate economic growth. But still, a lot of support is required to fund the private sector if they must continue to play their critical role. Recently, the Manufacturers CEO Confidence Index, surveyed by the Manufacturers Association of Nigeria, has shown some level of mistrust by the private sector investment in Nigeria. This mistrust stems from a variety of issues reported on cases such as breach of promises, complaints on high charges or arbitrary deduction from customer accounts, card maintenance fee, and ATM charges, and also lack of adequate credit support. There is no denying of the fact that most of these complaints are very genuine. But some of the issues stem from lack of synergy and effective communication between the two bodies. This calls for closer collaboration and dialogue between the two bodies to continually deal with areas of mistrust. This is why today's dialogue becomes very, very critical. The central bank has been playing a pivotal role. We are setting up of the Consumer Protection Unit to address cases of consumer dissatisfaction and service failure in the industry. In the same vein, the Chartered Institute of Bankers of Nigeria, being the conscience of the industry, as the custodian of banking ethics and professionalism, upholds the integrity of the industry through its subcommittee on ethics and professionalism. This committee is responsible for the resolution of disputes relating to unethical practices between or among banks, as well as between banks and their customers. On this note, I wish to commend the efforts of ACAMB once again for putting this event to advance the effort channeled towards building and maintaining bank customer relationships to achieve an enduring economic synergy. It's important to know that no economy can achieve any sustainable growth and development without cooperation between the financial system and its private sector, heavily supported with government policy and a secure business environment. As I then conclude with my remarks, I would like to implore all participants to fully get engaged during the discussion and deliberations of today. Make contributions as much as possible, because I know this promises to be very engaging. Let me then round up by this word from Scott, which says, if you believe business is built on relationship, make building them your business. Thank you all for your kind attention and wish you fruitful deliberation. God bless you.
Good morning, ladies and gentlemen. Permit me to stand on the existing protocols. I'm here to represent the national president of the National Association of Chambers of Commerce, Industry, Mines and Agriculture, JC Ideakola. My name is Ayo Oshulori. Distinguished ladies and gentlemen, on behalf of the Council and members of the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NASIMA, I express our sincere appreciation
for the invitation to speak at the first National Stakeholders Conference organized by the Association of Corporate Affairs Managers of Banks. It is indeed a great honor to be here today. I start my presentation by commending the organizers of this Stakeholders Conference for the choice of the theme, promoting synergy between the banking industry and the organized private sector, which alludes, at least, to some level of non-cooperation between these two entities within a framework that promotes sustainable economic growth and development for our country. While there is an understanding that today's conference is primarily a meeting of private sector operators, the banking industry stands alone as a conduit of storing funds, managing credit, and facilitating financial transactions. This role is critical for capital formation. In other words, channeling funds to productive investment, thereby promoting economic growth. However, as the Nigerian banking sector struggles with markets, operational, reform, and regulatory challenges, in a bid to ensure sustainability and profit-making entities, the private sector groans with the perceived difficulties in access to finance. This private sector position is well captured and articulated in the various national policy documents of the micro, small and medium enterprises, SMEs, by the Small and Medium Enterprises Development Agency of Nigeria, SMEDA, the most recent of which was published in the year 2021. According to these policy documents, some of the major challenges faced by Nigerian enterprises are as follows. On average, they have low operating capabilities and huge skills gaps in terms of management, technology, knowledge, and attitudes. There is predominance of necessity entrepreneurs over opportunity entrepreneurs. They face weak infrastructure, especially in terms of power, transportation, and workspace. They lack a collective voice and have relatively weak influence on policy formulation. They have poor access to vital resources, especially finance. The last 2 points bring us to the topic of this stakeholders conference, in that we must put answer to the question, how can promoting synergy between the banking industry and the organized private sector ensure the promotion of collective voice and increased influence on policy formulation for the private sector, as well as increased access to vital resources, especially finance. Two critical challenges, if resolved, will cascade into areas that will promote private sector productivity and growth. Before I proceed further, it is important that I make the distinction between the private sector and organized private sector. The former is the global collective of every enterprise, formal or informal, that conducts business in Nigeria. The latter is an organized collective that seeks to provide a voice for the former in terms of advocacy, business development, and trade promotions. With this voice, the organized private sector, of which NASIMA is the foremost member, echoes the challenges faced by the private sector in its efforts to access finance. The need for collateral and other forms of security often seems as exorbitant. The bureaucracy and the volume of documentation required, and the length of time between application for finance and disbursement. However, as we echo these concerns, we acknowledge the role these requirements currently play in ensuring the protection of the banking industry from issues that may affect their sustainability, such as an explosion of non-performing loans. Thus, it is my expectation that deliberations at this stakeholders conference will dwell on collaborative efforts between the banking industry and the organized private sector to manage and possibly reduce the risk of exposure to the banking industry while ensuring that the private sector customers of the industry focus on becoming organized. As I conclude, I emphasize our understanding of the organized private sector, that an efficient financial system breeds a vibrant economy for sustained, inclusive economic growth and development. Therefore, there is a need for the banking sector to further enhance investments by identifying and funding good business opportunities and facilitating the exchange of goods and services as a means of contributing to the growth of the private sector. For this role, you will find a worthy partner in the organized private sector. On this note, once again, I congratulate the management and staff of the Association of Corporate Affairs Managers of Banks for its first National Stakeholders Conference. A copy of this speech has been delivered to the organizers of this conference for distribution to the participants. Please accept my assurances that our association will continue to support initiatives such as this, as well as advocate for policies that will encourage a private sector-driven economy in Nigeria. Thank you all for listening. John C. Ubiatola, National President of NASIMA. Thank you.
Good morning, distinguished ladies and gentlemen. I'm standing there for my president, Engineer Monsieur Ahmed, who has to attend to a national assignment and asked me to stand in his place. I'll read his speech. First and foremost, he appreciated this invitation from the Corporate Affairs Association of Banks. Thanks so much for being invited, and then we're also happy that we were having an engagement with the banking sector. And he asks, I hope this will not be the last, the first and the last. And then he believes that through the outcome of this engagement, the benefits that are accrued to both organizations will continue to have this kind of engagement. Let me start on the existing protocol, distinguished ladies and gentlemen, to present his speech. The speech is titled Promoting Synergy Between the Banking Industry and the Organized Private Sector. Distinguished ladies and gentlemen, the Organized Private Sector of Nigeria is a body that brings together key business membership organizations. I think my colleague from NASIMA has defined who they are. They are MANS, Manufacturers Association of Nigeria, NECA, Nigerian Employees Consultative Association, NASIMA, NASME, and NASI, to speak for continuous improvement of business operating environment in the country. Distinguished ladies and gentlemen, because the spectrum of the private sector is wide, I would like to narrow my discussion to the manufacturing sector, who I represent. Of course, if we have to take it further, the banking sector is also classified as the private sector, so they are part of us.
even though they want to see that there is a handshake between the organized private sector and the banking sector. The industry and manufacturing sector and banking sectors are critical components of any economy. You will agree with me. This is not unconnected with the fact that the two shares mutual interdependence in the pursuance of both individual and national objectives. The industry needs the banking sector credits to improve investment, as my president said, and production, while the bank needs the rental income and equity subscription from the industry to maintain financial stability. I think that's the essence of this meeting today. Therefore, structurally, if the industry is erring, the banking sector will be affected, and vice versa. But you understand, I agree with me that most times the industries are declaring losses and bankers are declaring huge profits. The industry-banking relationship in the country has lost steam, as underlined by declining quantum of loans extended to the productive sector over the years. For instance, report from the Central Bank Statistical Bulletin shows that the share of commercial loans to the manufacturing sector to the aggregate loan to the economy averaged 0.1% from 2017 to 2021. There's no doubt limits manufacturing activities in the country in terms of investment and production. Although it was not feasible to ascertain the effect of the current low manufacturing activities in the country on banking sector performance, the sector still suffers industry-related income losses. Therefore, the choice of the subject of this paper is timely, considering that it will address the gap in banking sector lending to the industry to restore and improve the mutual interdependence of the two sectors in achieving the separate objectives while contributing significantly to national growth. The banking sector is a major segment of the economy. The industry deals with credit facilities, cash storage, investment, and other financial transactions. Also, the industry the manufacturers act as a link between depositors and borrowers and use the funds deposited by the customers to provide credit facilities to people who want to borrow as individual corporate customers, talking about the banking. Finance is vital to the growth of any economy. In view of the role of the banking industry, it is one of the key drivers of the economy because it channels funds to borrowers with productive investment, particularly the private sector. This establishes the interrelationship between the banking industry and the private sector. Let me take you to credit and output performance of the manufacturing sector. The primary focus of Nigerians' industrialization aspiration, as enshrined in the various industrial plans and documents, is on supporting and growing the industries, micro, small, medium, and large-scale manufacturing industries. You may agree with me that the manufacturing drives industrialization, and industrialization catalyzes economic growth, employment, and well-being. Therefore, I would like to look at the performance of the manufacturing sector in the face of almost innumerable challenges, including high costs and limited funds in the economy. One, the total sum of commercial bank loans to the economy from 2017 to 2021 was 92.81 trillion. The total commercial bank loan to the manufacturing sector was 93.21 billion for the same period. This accounted for 0.1% of the total loan to the economy. Prime lending rate averaged 15.3% and maximum lending 29.2% from 2017 to 2021. Feedback from manufacturers shows that most of them borrowed in between prime and maximum lending. This rate averaged 21.7% from 2017 to 2021. This was based on our survey. There is no doubt that the current performance of the industrial sector, particularly manufacturing, is due to limited funds available, which does not allow for significant investment and expansion in productive activities. For instance, the growth of the sector averaged 0.52% from 2020 to 2021, with an average capacity contribution to real gross domestic product of 9.0%, just as manufacturing capacity utilization averaged 52.7% for the same period. The trends, no doubt, show that the sector is facing daunting challenges, including high cost and limited funds. Distinguished ladies and gentlemen, it has been established that a well-functioning banking system and a vibrant private sector are important drivers of growth and poverty reduction of any economy. Finance is critical to private sector development and vice versa. However, the banking industry performance in raising funds to the private sector has not been optimal due to the constraints earlier mentioned and microeconomic challenges that increase the cost of funding, thereby discourages potential borrowers and consequently hinders the performance of the manufacturing sector and the same as banking industry. The banking sector and the private sector are mutually interdependent, as I've been said before, in the process of economic progression. Traditionally, the banking sector provides the industry with available funds for investment and business expansion in the industry. Unfortunately, either due to principle, commission, or economic exigencies, the traditional relationship between the two sectors has suffered over the years and no longer adequately enough to sustain investment and productive activities. The rate at which the bank lends to the industry has generated over the years, just as the tenor has ceased to be appropriate for industrial activities. Lending rate has become unbearably difficult to accommodate by the industry, and credit tenor has remained short-term, which falls short of business gestation periods. Distinguished ladies and gentlemen, let me take us to synergy for growth. What we need to do for the two of them to encourage economic growth. The performance and development of both sectors is expedient for the sustainability of the economy. Hence, it is of necessity that both sectors work together to reduce poverty, attract investment, and boost the growth of the economy. There are areas of collaboration between the banking industry and private sector. We are going to look into to increase relationships thereby. Aid the delivery of the sectors. The involvement of government through the CBN is also essential to formulate policies and ensure compliance of the stakeholders. The areas of synergy we are looking at and we are presenting to the conference to consider: 1. Long-term loan. It is necessary for the banking industry to consider and formulate a mechanism to accommodate the private sector request for long-term loan, especially the SMEs. This will reduce the financial barrier of the sector and attract more investors into the country. 2. Forex availability and street forex response. Inability to access forex has led to a reduction in production of most companies. There is need for banking industry in collaboration with Central Bank of Nigeria to ensure easy access of private sector, especially the manufacturing sector, to forex for importation of inputs for production. In addition, there is need for a dedicated text to facilitate swift response to forex requests by the manufacturing sector. 3. Single-digit interest rate. Double-digit interest rate increases the cost of funding. Hence, it is not business-friendly. These are being one of the hindrances to the competitiveness of the manufacturing sector in Nigeria. Provision of revitalization funds for the private sector and single-digit interest rate in conjunction with the central bank and government will encourage and boost performance of investors. It is also expedient that proper monitoring mechanisms be developed to ensure strict disbursement to the approved sector. 4. Purchase of capital equipment. acquiring or capital equipment necessitates huge funding that may not be solely sourced by private sector. Establishment of partnership platform between the bank and the manufacturing sector will create an avenue for the purchase of such equipment, and the reform will be duly made based on payment processes as contained in the regular agreement. Joint venture. Security of loans has been one of the major hindrances of loan disbursement to private sector. To guide against misappropriation and diversion of the funds, the banking industry can go into joint venture with manufacturers in specific production investment to ensure security of the loan, appropriate refunds or mutual benefits of the parties. Distinguished ladies and gentlemen, as earlier stated, the traditional industry bank lending relationship is no longer supporting the growth of industry. The bank and the economy as a whole, industry activities have massively declined, showing rising number of moribund industries within the industrial areas across the country, and increasing capital flight that beset the economy. Based on this information, it is important that the commercial banks and industry should come together to chart new ways of supporting each other to the benefit of all. There is no doubt that the industry needs the bank to increase investment and production, while the bank needs the industry for interest payment incomes and equity participation. On this account, we do recommend the following measures through this August gathering. 1. Develop corporate patriotism to strengthen the willingness to lend at the interest rate that supports both industry and banking sector for the good sake of growing the economy. Devise processes for sustaining long-term loans to the industry and engaging the private sector with it. Recognize the need to prioritize attention to industry forex requests, particularly in this trying period of acute shortage of forex. Ensure that government and international industry development funds are well accessed without undue difficult conditionality. On this note, ladies and gentlemen, I want to thank you for your audience.